In this video, we're going to be going over our brand new Plan Sponsor 101 website page. All right, this is our annual 401k checklist. These are the things that every plan sponsor has to do throughout the plan year to maintain a healthy plan. We've got assets. This is a description of what assets are, why we need them, where you get them from, how we get them, and what we do with them. Another example on here is going to be the annual questionnaire. This is our online form. What you're seeing now on the website is a sample of what a portion of the annual questionnaire looks like. Now, this is stuff that you don't need to be afraid about asking. This is stuff about your company, things that you know. Name, address, phone number, EIN, who's your CPA, do you want to make a discretionary contribution, those kinds of things. The annual questionnaire is where we get information that we can't get from a payroll report or from your asset holder. Next is the employee census. Got another longer video about what's going on in the employee census, but the employee census is crucial to completing the compliance work timely. And on an employee census, because of new rules starting next year, we need all of your W-2 employees, every single one of them, regardless of how long or short they've worked for you and whether or not they're union. All right. The next one is an ERISA Fidelity bond. This is something every plan sponsor that has an employee has to get. It's a piece of outside insurance that helps cover loss to the plan in case of, neglect. Sorry, not trying to cause offense, but that's what the IRS wants us to do. We have a link on the website as well to help you go and buy that online. But first, maybe ask your property and casualty agent. Another thing that's done pretty much at the end of the process is the Form 5500. This is a form that needs to be filed online every year for 401k plans, for 403b plans, for cash balance plans. If you're an owner only with less than $250,000 in combined plan balances, you don't have to file one of these. But if you've got more than 250, you do have to file them. All right. We've got a little bit of an intro here as to what's going on and a sample of what the invite email looks like. Now then, participants come and go. All right. That means that when they go, whether voluntarily or not, they have to be paid out of the plan. That's the distribution process. We've got a summary of what has to happen there. We need a little bit of help from the employer on these things, but a lot of it is taken care of by the record keepers. A large plan audit. This is going to apply to plans with more than 100 participants in it. This is not the same thing as a random IRS or random Department of Labor audit. This is something you need to plan for each and every plan year. This is something you engage with an independent CPA. Best practice has it be a CPA firm that's different than the plan sponsor's CPA firm. All right. They review some additional information. They go into a lot more depth even than we do. There's a lot of additional forms that they have to fill out, random sampling and things like that. Most of these fees can be paid for by plan assets if the employer would like. Annual notices are the notices that need to be distributed mainly before the start of next year. All right, these are things like your safe harbor notice and your QDIA, which helps define to plan participants what the default investments are. All right, and it lets participants know what their opportunities are for the coming year. So these generally need to be distributed at least 30 days before the start of the plan year. We create these for you, but for most of our clients, they take on the responsibility of distributing those notices themselves. If you've got some specific questions about that, of course, reach out to us. We can probably come up with a way to help distribute those notices for you. We've got two sections that are for defined benefit plans only. There's an actuarial certification. Regardless of how many employees you have in your plan, even if it's an owner-only plan, we have to have an actuary certify that the correct amount has been deposited into the plan timely. Now, what the definition of correct amount is going to depend for each different plan, all right? It's going to be a function of what the plan document says your obligations are and what actually happened as far as rate of return, what the gain or loss was in the account balance or in the trust. The other area that is specifically for our pension friends is the Pension Benefit Guaranty Corporation. This is a separate insurance policy that most pension or cash balance plan sponsors must pay. It's comprised of two different parts, flat dollar amount per participant, and then a variable amount based on what the PBGC is considering unfunded, all right? Even, spoiler alert, even if you're making the required or recommended contribution that the actuary is telling you to make, the way the PBGC does these calculations, you may still have what's considered to be an unfunded portion, all right? But this is not for every cash balance plan sponsor, just most of them. Employee deferrals and their deposits and their timing. All right, it's very important that plan sponsors understand that when you take money out of an employee's paycheck, that's an employee deferral, that it get deposited into the trust as soon as possible. Generally, the IRS would like you to do it the same time you're making your corporate tax payments. So for most of our clients, that ends up being about 3 business days after payday. All right, a lot of payroll companies can help our employers get the money from the corporate account into the plan sponsor's account timely. This is not something that you can do randomly. This is not something that you can do once a month. This needs to be done based on when you actually have participant payday. There are different rules and different timing for employer contributions than employee. It is legal for every employer contribution to be made after the close of the plan year, even for cash basis filers, which is most of our clients. You can choose to have some of these deposits made throughout the year, but you're probably going to have a little bit of a true up later on after the end of the plan year. Safe harbor contributions, the 3% or the match, are very often made each pay period. They don't have to be, but they can be. Other matching contributions are also often made during the plan year. They don't have to be. Most employer profit sharing contributions, if we're trying to do something to leverage an amount to specific employees, it's usually best to have those made after the end of the plan year, all at once. And then of course, cash balance contributions have a whole different timing. It's all right for employers to make nominal payments throughout the year, but get them all caught up after the end of the plan year, or like many of our clients, make one single deposit all at the last minute before September 15th, all right? All of those are okay. Now then, many of our clients would like to know what could they possibly do throughout the year? What's their minimum? What's a good leverage contribution allocation? If they're not safe harbor, are they gonna fail non-discrimination testing? Twice a year, we send out an email to all of our plan sponsors letting them know that there's an optional service where they can have us complete this kind of preliminary calculations, whether it's non-discrimination or minimum calculations. Also, if somebody's W-2 and they have a possible range for an owner, if they have a W-2 range that their CPA is happy with, we can help figure out what's the optimal what the optimal compensation amount is for certain W-2 owners. Again, this is an optional service, so that means it's got some extra money in there. And if you make use of it one year, you don't have to make use of it the next year. It's discretionary each and every plan year. So I hope this walkthrough of our new Plan Sponsor 101 page was helpful. If you like this video, check out our other video, the 6 legal reasons to take a hardship withdrawal, if you would like to learn more. And we would love to continue this conversation with you, so please comment below or visit our website with the link in this description. Hope this was helpful. Thank you for watching.